Hello everyone. Today we will discuss the how to investigate, interpret, and perform calculation involving insurance rate and premiums. So the learning standard for today is we are going to interpret, investigate, and perform calculations involving insurance rates and also premiums. Alright, so this is our main concern for today. Alright, so we will investigate, we will interpret and perform calculation involving insurance rates, okay, insurance rates and also the premiums. Alright, so let's go through how to investigate, interpret, and perform calculation involving insurance rate and premiums. Let's see this example. Example 1. We are given a table shows the premiums for travel insurance offered by Sharikat Insurance PQ Berhad to countries in Asia and Europe. So let's go through the table carefully. Alright, so you have a table, and now the most important is the numbers of days. You have 1 to 5 days, 6 to 10 days, and 11 to 18 days. And annual premium means that from 18 to 69 years old. Okay, so let's see the policy holder. The policy holder have to pay for Asia and Europe. The amounts will be different. For Asia, 1 to 5 days is 39 and 39 ringgit Malaysia. For 6 to 10 is 58. So for 11 to 18, 79. And for 230 is actually for the annual premium from 18 days to 69 years old. So let's see for Europe. For Europe, the amount paid will be a bit expensive. I think it's due to the country which is further from Malaysia. 53, 79, 127 and 280. Alright. So as you can see, when the numbers of days increase, the premium of the insurance paid by the policyholder will also increase, right? So now let's see the how about the policyholder and spouse. Let's say the policyholder want to buy for one whole family or for the spouse. Now we discuss the family later. We just discuss the spouse. That means they are going together, right? Okay, 69 for the Asia. For Asia is 69, 1 to 5 days. 6 to 10 days is 107. 11 to 18 will be 152. And we don't have annual premium for the spouse for Asia. And how about for Europe? For Europe, let's have a look. For Europe, we have the price which is a bit expensive, right? So the price will be a bit expensive, 98 for 1 to 5 days, 6 to 10, 150, and then 11 to 18, 246 ringgit Malaysia. And how about for family? For family, family in Asia is 87 for 1 to 5 days. 6 to 10 days is 136. and 11 to 18 days will be 218. And for Europe, how about for Europe? For Europe, the price will be a little bit expensive, right? As you can see, is 133, 184, and 304. And for the annual premium, 18 to 69 years old, we don't have for family, okay, and also for policyholder and spouse. All right. So let's study the question. Okay, study the question. The A, what are the factors? What are the factors? What are the factors that influence the differences in premiums and travel insurance? Right? The premium and travel insurance. Okay, so can you see the premium? Okay, what are the factors? We can see numbers of days, right? So that should be the factor that keep on changing, right? And okay, for number 2, then we can see that why is the premium higher for longer travel period? Yeah, when the time increase, when the number of days increase, the premium will be higher. And then Shahriar works as a photographer, requires him to visit many countries in Europe. Within a year, one whole year, he need to travel. Okay, so if the duration is about 1 year, so I think it's quite, time consuming. So Shahriar will visit a country for 12 to 15 days. Okay, which insurance is suitable for Shahriar to buy in relation to his job. His job need him to travel almost throughout the whole year. So you have to give your reason. Alright, so let's answer question number 1. Okay, for question number 1, let's see how to answer question number 1. What are the factors? Okay, there are many factors, right? The factors are destination, right? Example, we have Europe and Asia. Not the premium are not the same. Duration of travel, the time, number of days, and number of people, spouse, family. So there are 3 factors here. Okay, so what are the factors that influence? There are 3. One is destination, duration of travel, and number of people insured. Okay, now why is the premium higher for a longer travel period? Of course, when a long travel period, that means the number of days increases, the probability of loss to the policyholder, okay, is actually higher, right? While abroad, so the probability of loss is higher, increase. Alright, so when the numbers of days increase, the probability of loss will be increased. That is why the premium is more expensive for longer travel period. Okay, then we see how about Shahriar. Shahriar should buy which type of insurance policy. So Shahriar should buy an annual travel insurance for countries in Europe, as it is more economical than buying insurance for 18 to 11 to 18 days per trip, right? Okay, so because annual premium is just 230, so if because the duration for one whole year is 365 days, right? So it's quite cheap compared to he buy 11 to 18 days. 18 days he need to pay 79. If let's say 10 times he need to travel to Europe to take the photo for for his work, so it will be 79 times 10 times, so it will be 790 ringgit, which is very expensive. So Shahriar should actually consider annual premium, right? Annual premium, which actually he can save a lot if he travel almost every day throughout the year, as his job require him to travel. All right, do you understand? Okay, so this is a discussion about the interpret and perform calculation involving insurance rates and premiums. So we will discuss more exercise in the coming lesson. We will actually learn how to calculate a premium for life insurance. Before that, let me just go through a little bit about how to calculate premium for life insurance. For life insurance, okay, in order to calculate the premium for life insurance, okay, we focus on life insurance. The amount of premium paid depends on the chosen face value. You know, face value, age, gender, and a smoking status. There are four: face value, age, gender, and smoking status. This premium calculation is based on premium rate schedule for every RMX face value. So we need to refer to the premium rate schedule. Okay, so the premium. Okay, let's highlight the premium. The premium is equal to the face value of policy per RMX multiplied by premium rate per RMX. Meaning that, let's see this example. The annual premium rate schedule given per 1,000 face value of a year renewable term insurance offered by Syarikat Insurance XYZ. So just study the table. As you can see, when the age increase 35, 36, 37, 38, and until 40, right? 39, 40. So the non-smoker, the male, okay, the male is 2.12, followed by it will increase when the age increase. You see or not? Okay, the highest is 2.66, and it will be much more higher if it is a smoker. Okay, smoker will be 2.72, 2.80, 2.91, 3.05, and 3.23, and then 3.47. Okay, it increase as age increase. This is meant for male. For male is higher than the female, as you can see. And then for smoker is higher than non-smoker. For female, let's focus to the female. For female, the non-smoker and the smoker it seems like lower than the male. And then for non-smoker, it's actually quite low, which is 1.45 compared to smoker. and that is for age 35. For age 36 it will increase, 37 will increase, and then for 38 it will increase to 1.63, and for smoker it will be 2.03, and the highest is 1.80 for non-smoker, and for smoker is 2.20, which is still lower than the smoker for the male, which is highest 3.47. Okay, so what we need to go through is when the age, okay, we can observe, we go through the table, we observe when age increase, the non-smoker, we can see the risk is higher, right, when the age increase, and the risk is higher for male compared to female, and also the risk is higher for smoker compared to non-smoker, right? Okay, let's see this one. Yearly renewable terms insurance. Yearly is actually provide protection for 1 year and can be renewed for the next year as stipulated in the insurance company. Alright, so why does the premium rate increase? Okay, why? As age increases for smoker. Based on the table, calculate the annual premium. How to calculate the annual premium? We have to use a formula just now. For each of the following situation. Okay, the case 1 is about the Mr. Guan want to buy an insurance policy worth RM 100,000. He is 39 years old. So we have to refer to the table. Healthy, he is healthy, and non-smoker. So 39 years old, where is it? Let's have a look. 39 years old. Alright, 39 years old, and he is a non-smoker. So this is actually the case same with Mr. Guan, buy an insurance 100,000, 39 years old and non-smoker. So we'll focus to non-smoker and age 39 years old before we do calculation later. Now let's read the question first before we answer the question. Okay, so then the next question is Madam Sapurwa is 36 years old. Age is very important. Healthy and non-smoker. She wants to buy an insurance policy worth 250,000, right? 250,000, and wants to add on a critical illness policy. Okay, Sharikat Insurance XYZ offer a critical illness policy with a coverage of 30% of basic face value and premium rate of 1.77 for 1,000 based on Madam Sapurwa's age and health status. So now we are going to discuss now, right? So do you know the answer for number 1? Why does a premium rate increase? Why? As age increase, the premium, as you can see, the premium increase. This is a premium rate. It will increase when age increase, right? Okay, going down it increase. So for a smoker, here also the same. It will increase from 2.72 to 3.47. Why? So the answer is premium rate increases with the increasing age. Okay, increasing age. The reason is because the life expectancy of each person decreases. okay, decreases with the age. All right, understand? Okay, that means when the age increase, the life expectancy of the person decrease with age. Okay, settle. Now we will see when age increase, the life expectancy decrease, right? For a smoker, the probability for a smoker, the probability for a smoker being exposed to illness is higher than a non-smoker who live a healthy lifestyle. So the healthy lifestyle is very important. So the more healthy, the probability exposed to illness is lower. Okay, so that's how you answer the question for a smoker. The probability of being exposed to illness is higher compared to non-smoker, right? Okay, let's see how to calculate the annual premium for Mr. Guan. Annual premium, Mr. Guan want to buy an insurance policy of 100,000 and he is 39 years old and a non-smoker. So let's see how to do calculation. So as I just now highlighted, we have studied the table 2.49 for age 39. So what you need to do is quite simple. You copy down the formula just now. The premium rate also you copy down is 2.49. So the coverage is 100,000 over 1,000 times 2.49. It's very simple. That's called annual premium. Okay, annual premium. So that's how we calculate the annual premium. That means we need to find out this one, the premium rate. This is called premium rate. All right. So now for number 2, we need to calculate for Madam Sapurwa, 36 years old, and a non-smoker. Okay, let's see. The policy worth 250,000 plus the critical illness policy. Okay, and then the insurance company offer illness policy with a coverage of 30% per a basic face value, and the premium rate is 1.77 per 1,000 based on Madam Sapurwa's age and health status. So let's see, 36 years old female, right? 36 years old here, and then female. Okay, and non-smoker is 1.5. It's just 1.5 for the premium rate. Okay, so let's see. For the it's 1.5. I just highlighted just now. So it's 1.5. Okay, so the total coverage for critical illness is 30 over 30%, right? It's 30%. So let's see, we will take 30% times 250,000, which is 75,000. Okay, so Madam Sapurwa's annual premium you have to plus. So first of all, you have to calculate the annual basic premium, 250,000 over 1,000 times 1.5, and plus the 75,000 over 1,000 times 1.77. So the annual premium for Madam Sapurwa is 375 plus 172.75. So it's 507.75. Okay, so this is the annual premium that Madam Sapurwa need to pay to the insurance agent. Right, so how you do calculation is you must refer to the table, right? Like example, we will focus to this one, 36 years old, non-smoker. Okay, then we go to the table, we will find out this one, 1.5, which is the premium rate. So it's quite simple, the calculation. You just take the 250,000 per 1,000 is fixed per 1,000. Okay, and you have to times with the premium rate. All right, and this one is actually given by the question. For the premium rate is not in the table, but the coverage you have to calculate 30% of the 250,000, right? So then you just add the two, you get the answer, which is 507.75. All right, that's all my sharing for the how to calculate the premium rate, how to calculate the annual premium. Okay, how to study the annual premium rate in the schedule, and also we learn how to calculate premium for insurance. All right, so the premium rate schedule. What is premium rate schedule? Okay, just now I showed you the premium rate schedule. It actually provides a gross amount of premium charged to a policy holder, And what is the face value? What it means by face value? Face value is actually the face value of a policy is the amount of the money chosen by the policyholder to obtain the insurance coverage. So it's actually up to the policyholder, right, to choose how much of money the policyholder want to cover. Okay, this amount will be paid to the beneficiary. In the occurrence of death. Okay, let's say anything happen, this amount will be paid. Okay, in case occurrence of death or total disability. It must be death or total disability of the policyholder on the policy's maturity date. Okay, it must be paid to the beneficiary in the occurrence of death or total permanent disability of the policyholder on the policy's maturity date. So this is very important. Okay, so again, the face value of policy is the amount of money chosen by the policyholder to obtain insurance coverage. So it's not a fixed amount. It depends on the policyholder how much she want to choose. All right. So that's so-called face value. Okay. So I have explained to you what it means by premium rate schedule. Again, premium rate schedule provide gross amount of premium charged to the policyholder, and face value is the amount of money chosen by the policyholder to obtain insurance coverage. Okay, so that's all for today. All right, so this is a very important formula for us to calculate the premium, okay, for the insurance coverage for life insurance. All right, so please remember, premium is equal to face value of policy divided by RMX times premium rate per RMX. Okay, that's all for today. I really hope that my sharing do help you, and it's interesting to study insurance for the consumer mathematics. Bye bye and have a nice day.